The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.
For millions of Americans who retire every year, the task of ensuring that your money is working hard enough to provide you with a consistent paycheck can make the job of working for that paycheck seem easy. Retirement doesn't signal the end of financial worry. In fact, for the majority of retirees, it's just the beginning. The assets you have built must be able to provide you and your family with financial security for all the years to come. That's why you need a game plan for retirement, making sure you have a plan and that your money is working hard to provide you with an income you can depend on. This is your game plan for retirement.
And welcome into your game plan for retirement, the show that challenges some of the traditional financial planning concepts, the outdated conventional wisdom from Wall Street on how to build for financial success. We talk about new models that has proven to provide for more financial freedom in retirement. We always check in with your local income allocation advisors on the program. Lehigh Valley and the Poconos, we check in with the team from ASC Financial Group. Josiah Grauso joining us on the program today. Josiah, welcome back to your game plan for retirement.
Hey, thanks, Peter. It's great to be here.
Well, it's always a pleasure having you on the program to help us increase our education on some of the difficulties that you are seeing retirees face. Now, for most people, we only retire once, and so we only know our situation and the problems that we face. But having seen multiple retirees, in fact, many hundreds of different people's situations throughout the years, I'm sure that you have seen numerous different situations and scenarios and lots of sets of problems, so that in retirement, we really don't have time to learn from our own mistakes. You've seen some of the mistakes that have been made. You can help teach us about those, and more importantly, I suppose, teach us how to avoid those, can't you?
I think that's a goal that we try to strive for at our office here, is taking some complex situations and being able to reduce that down to simple, easy to understand, real-life applications or solutions to solve some of these concerns that we see.
I want to remind you that if you do have questions about your own financial situation or retirement plans, pick up the phone and give a call. Josiah Grauso, the team from ASC Financial Group, they make their time available to you as an extension of this radio program on a complimentary, no-obligation basis, whether it be just to answer a couple questions or for that detailed, thorough forensic financial review and analysis where they will go in-depth into your financial plans and make sure to analyze all aspects of your game plan for retirement. They do that, again, on a complimentary, no-obligation basis. All you have to do is pick up the phone and give them a call at 800-939-8633. That's 800-939-8633. And Josiah, we have talked about the fact that the vast majority of people who are working and saving for retirement are doing so inside of their company employer-sponsored plans, the 401k plans by and large. But when it comes to those plans, there are some implications that we need to realize as we are working and saving, and a large part of that is the tax consequences of the way that we are saving.
Absolutely. Some of the things we have to make sure we're looking out for is one of the biggest, I would say, myth out there is when it comes to tax planning is, while I'm in retirement, I'm not going to have to pay as much taxes because I'm not going to be making as much money. The truth of the fact is that may be true to a degree, but some of the things you think about when you're in your 20s, 30s, 40s, and 50s that reduces our tax burden are these things called deductions, possibly mortgage interest, and most importantly is those of us who are married and we have children, we get to deduct those guys off of our tax plans. And as we get into retirement, we may not be making as much an income, but we lose a whole bunch of deductions that we have from our normal tax plan every single year. And so being able to understand how that works and the different strategies that you may have to employ, which are a little bit different, especially with these type of qualified plans and 401ks and 457s, 403bs, where you're forced to start taking money out of the accounts at a certain age because, unfortunately, Uncle Sam doesn't want their dollar to be paid on their taxes.
So you believe that the belief that we pay less in taxes in retirement, that might just be a financial myth or a misconception, that people need to realize some of what's behind that.
Yeah, absolutely. You may not be making as much of a take-home income as while you were working, but we may be paying a higher tax bracket because we're now in different thresholds that we weren't before. On top of which, we're also going to have other streams of income that we have coming in, like Social Security, which if you make too much money, 50% or 85% of that Social Security can now be taxed or subject to ordinary income tax.
And case in point there, Josiah, is that while we are working, our salary is not typically what we're taxed on. And in fact, you spoke to the deductions, but a lot of the savings that we are doing is also a deduction. So any money that we're putting away into retirement savings in those plans, such as 401ks, 403bs that you mentioned there, that's not counted on our taxable income. So the money that we're bringing home, typically, unless we're doing some significant additional savings, that really is our lifestyle money. That net, after we've paid our taxes, after we've done our savings, that's what we are living on. And I think that there is kind of a compounding on this misbelief or myth that when we retire, that need for income is going to significantly reduce as well. And that's not what you are seeing as people are transitioning into and making their way through retirement, is it?
No, not at all. It's a great point, Peter, is that, the income that they're bringing in, this is money that they're taking that they're essentially going to be spending on an every month or an annual basis. It's not typically being put into other accounts or deductions, whether it be through 401ks or health savings plans or even with some children or college savings plans. We don't really have that ability or what we see out there that's being paid for. So every dollar we're really taking in, that's going to be our taxable income bracket for the most part that we are watching and that we're realizing.
And in retirement, every day is kind of a Saturday. I don't know about you, Josiah, but I spend most of my money on Saturdays and Sundays on the weekend when I'm not working.
Absolutely. You work during the week for your Saturdays. And in retirement, I can't think there's a better way to say that, but every day is a Saturday in retirement. Can't wait to get there at some point.
Me as well, but it's seeming like it's an increasingly difficult challenge. And when you're talking about these tax implications, we know what taxes are today. Do you ever discuss the wisdom with your clients, individuals that you see and talk to, of taking that tax deduction today for an unknown potential tax liability into the future?
It's definitely conversations that I have on the table with a lot of my clients that come talk to us. Some of the people out there may know of Ed Slott. I'm considered an elite advisor through Ed Slott, training directly through him. And one of his big mantras here is, first of all, let's try to get the government out of our pocket as much as possible. And something that everyone has to understand here is for those qualified plans that you have, these 401ks or IRAs that you have a partner in those accounts. I always joke with my clients, what does an IRA stand for? Almost everybody says an individual retirement account, and it doesn't. It's actually an internal revenue account. They're your partners in these type of accounts of where they're the only ones who can determine how much of a partnership they may have by increasing or decreasing the taxable brackets that we're in every single year. Could be at 30%, could be at 35%, could be dropped to 25%. They're the ones who determine their stake in that partnership. And I look at our budget right now that Congress passes for this country, and I don't think they're very good managers of money. And so trying to minimize the amount of taxes that we have to pay out, especially in retirement, is some big plans. I teach a class called Passport to Retirement at some of these local colleges in this area here. And that's some of the things that we stress and we talk about is it better to pay tax on the seed or on the harvest? Because every time we deduct these taxable accounts, we are going to have to pay for it at some point later down the road. For some people, it does make sense to go down that route. For others, a conversion or looking at some more tax-free potential accounts may be in their better interest.
The thought has to have crossed your mind that because the government is not great managers of money, they may need more revenue into the future, and therefore they have to get that revenue from somewhere. Increases in taxes means that retirees get to keep less of every dollar that they withdraw from those retirement accounts. And in fact, you referenced to Ed Slott, who is well known as a retirement and IRA guru. In fact, he's got a PBS special. But Ed Slott has referred to the IRA, I believe, as a ticking tax time bomb or just an IOU to the IRS.
That is absolutely one of the things that we sit down with everybody who comes into our office for a consultation meeting is that do they understand what their accounts are and how they work and what are the possible ramifications, not only for themselves but for their heirs, their beneficiaries, their future generations. And if you think about the government and the IRS, I mean, they're not dumb people on the hill there. They know what they're doing. They're smart. The idea, what they're thinking is while you're in your higher earning potential, you can deduct by adding money to these tax-deferred accounts, these 401ks or IRAs, because the theory, or quote unquote, is that you're going to have less money in retirement so you can take out more and not pay as much taxes. Well, if we think about going through that philosophy and going down there and we're contributing money to our 401ks or IRAs and we have a large taxable bundle of money, and let's say we're only taking out a small percentage of it, and God forbid something happens and you pass away, where is that money going to go? Well, if it goes to your spouse, they can roll it over and still defer the taxes or take a little bit out. But if it goes to anybody else, i.e. your children, that could be a lump sum taxation that's going to be affected them. And if you think of somebody who's in their 60s or 70s or 80s, their children are typically going to be in their 40s and 50s, potentially their 60s when they receive that distribution. They may be now in their highest earning potential. And if it's not handled properly or strategically, a large portion of that account is going to go back to Uncle Sam for his due.
Well, if you've ever had questions about this or thought about these issues and had concerns about them, I encourage you to seek out some guidance, some wisdom, some education and answers from the team at ASC Financial Group, who have helped the residents and listeners across the Lehigh Valley and the Poconos have a retirement built to last, and they can help answer these specific questions and concerns for you. And if you are saving or have already saved in a tax-deferred manner and would like to see how to potentially reduce and eliminate those taxes into the future where morally, legally, and ethically possible, pick up the phone and give them a call at 800-939-8633, the number to call. Again, that's 800-939-8633 to take the team from ASC Financial Group up on the offer for a complimentary financial review and evaluation. And again, we're talking with Josiah Grauso of ASC Financial Group, and we are talking about the decisions that we are making with the way that we are saving our money and the tax planning that we are doing. Josiah, most people only think about tax planning maybe in the week before April 15th or whenever they're doing their taxes at the beginning of the year. But with each and every dollar that we are saving and putting away for retirement, each dollar has its own tax plan, doesn't it?
Oh, absolutely, Peter. There's different ways you have to look at that dollar that you kind of put into your account. We should really be able to determine what are the importance, how is this dollar going to affect us going forward, both in a taxable point of view and a growth point of view and a distribution point of view.
You mentioned this opportunity to maybe grow and have income that is tax-free into the future, and it might be something that we wanted to explore within the 401k. Can you talk about that option? I've heard of the Roth IRA, but I'm not sure a lot of people are aware of the Roth 401k. What is it and what does it entail?
Sure. When you're talking about a Roth 401k, it is very similar to your traditional 401ks. If you have a match, they can be matched as well. But essentially, instead of you deducting the amount of contributions that you're paying into your 401k, you will be taxed on that. For a nice simple round number, if I have $100,000 and in a traditional 401k I contributed $6,500, my taxable income would be down to about $93,500. With a Roth 401k, if we make that contributions, we're going to get taxed on that full $100,000
of income.
Of income, correct. However, the trade-off is every dollar that now grows is going to be in a tax-free bucket. The government already took their hands out of your pocket. They took their share. They're never going to be able to dip it back in there again. And that's going to be able to grow tax-free for the next 10, 20, 30 years or longer, depending on how long your retirement's going to be. We are still bound by some of the strategies of a traditional 401k. Typically can't take it out until we're 59 and a half. Possibly a little bit earlier, 55. The other side of it is with a traditional 401k at age 70 and a half, we're forced to start taking it out. Why? Because the government wants to get paid their tax dollars. Well, if you had a Roth 401k, when you reach 70 and a half, there is no required minimum distribution because the government already received their taxes on that account. And that could greatly impact things like your Social Security. When you're determining how much tax is owed on Social Security being paid out, one of the things that's taking into consideration is all the taxable income you get, including distributions from a 401k or an IRA. Distributions from a Roth 401k is not counted towards your Social Security number.
So really, we're getting the government out of our pockets in a couple different ways by doing that. And I don't know about you, Josiah, but if it's up to me, I do want the government's hands out of my piggy bank, so to speak, now and when I retire. I know that there is a ethical obligation for me to pay my fair share in taxes, and I'm willing to do that. But as much as possible, if I can strategize on ways to minimize that, I would like to take advantage of those. And what you're saying is that there are opportunities for you to, within the law, morally, legally, and ethically, reduce or eliminate the government from having a taxable liability that they are taking money out of our retirement accounts once we transition into retirement.
Yeah, absolutely. It's the required minimum distribution. And again, I fully agree with you that the government has not proven themselves to be good custodians of money. The debt ceiling we've got right now is just astronomical. And honestly, I don't have a crystal ball, but I can't see it anyway getting better. I think it's got to get worse before it gets better unless we're making some drastic changes. And it's going to come down to a simple math problem. Within the next, I think it's 10 years or so, just the interest alone on our national debt is going to be the third largest expense that our government pays outside of Social Security, Medicare, and Medicaid. It's really a math problem. Tax rates are going to have to go up in order to try to get a hold of this type of a situation. Again, I don't have a crystal ball, but it definitely concerns me over these last couple of years that we've been seeing. In fact, these last couple of decades that we've been seeing in our government. And if it is all possible and we can start to get that government out of our pocket, I think we'd be better later than we are going to be today.
Well, folks, if you agree, pick up the phone and give a call to the team from ASC Financial Group. By keeping more of your money, you're more likely to have a retirement that is built to last. And Ralph Grauso, Josiah Grauso, the team there at ASC Financial Group, they can help you achieve that. Call them now for a complimentary review and evaluation, 800-939-8633. Again, that number, 800-939-8633. And while nobody has a crystal ball that really works, we can look back in history and maybe gather some information from looking back. And Josiah, as you were talking about the potential for taxes to increase into the future and plans to maybe try to reduce our taxes if and when that happens, or even if they were to stay the same, historically speaking, we are in a pretty low tax environment today. So today would be a great opportunity to maybe take advantage of some of those strategies because taxes are on sale right now.
I fully agree with you. If we look at really where the taxes have been in our tax rates since the 1920s and peaking in the 1950s, 1940s there, I do think tax rates are on sale right now. Some of the things that we talk about with our clients, and when we talk about these kind of Roth conversions at times, is if it makes sense to do that, and we propose this to every client that comes into our door, but if you think tax rates are going to be higher in the future than they are today, a Roth conversion may be beneficial for you, or taking a look at a Roth contribution. If you feel they're going to be lower, then it doesn't make sense to you. But I just don't see any way out there our taxes are going to be lower in the future, knowing the debt and the type of structure that our government has that we have to pay into taxes on it. So I absolutely agree that I think tax rates are on sale for the next foreseeable future. However, with that being said, this election come November is going to be huge. We can go a couple different ways that we see where tax rates are going to go come the future. It could really change the landscape for the next 5, 10, or more years.
Well, I don't want to delve too deep into politics. Certainly we have a vote, but we don't have a whole lot of control about what goes on in Washington once all the votes are tallied. But we do have personal control over our finances, and I think that's what we really need to focus on a day-to-day is what we do have control over, what we can affect changes in that would benefit us into the future. And certainly thinking about these tax implications is one of those things. So folks, pick up the phone and give a call because the team from ASC Financial Group, they help the residents of the Lehigh Valley and the Poconos have a retirement built to last. And whether you are planning and preparing for your retirement or transitioning into or making your way through retirement, they can make sure that your investments, your accounts, your assets are set up in a way to provide you with just that, a retirement built to last. Give them a call at 800-939-8633. Again, that number, 800-939-8633. Taking a step back for a moment here, Josiah, if there is a match from your company being offered, regardless of the tax implications, it's probably a wise thing to take advantage of that match, correct?
Absolutely. I mean, I will say that these matches are getting smaller and smaller by the day. Some don't have a match at all. But with that being said, to me, a match is a free money that's out there, contribution-wise. If your company matches 3%, I absolutely encourage you to max out what that match is. Again, if they allow that to be done on a Roth basis of a Roth 401k, take advantage of that. But I think getting a match where you're getting money from your company added into what you're putting in, I think is absolutely free money, and I would encourage everybody to make sure they're maximizing whatever that match could be.
And you can help people review and evaluate these different options within their 401k plans, correct?
Absolutely. That's why we always sit down with our informational or our discovery meeting. We find out what are some of the concerns or issues or some of the things that maybe that our clients haven't thought about or talked about or before they became clients, some of these kind of concerns that other people are not maybe mentioning to them, and they really should start really taking a look at it and developing strategies of their own on how to minimize some of these concerns or risks.
And I think we all like to have the perception or the reality of having some control over our finances and over our money. And the decisions that we're making inside of our 401k, while sometimes are limited, you do have control over those. So make those informed decisions, folks. Pick up the phone and, again, give a call to the team from ASC Financial Group, Josiah Grauso, Ralph Grauso, who you've heard here on the program. They are here to help you, and they can help you with a retirement built to last on a complimentary, no-obligation basis. They'll sit down with you and help you address your questions, your concerns, or just some of the options so that you have better control over your money and the jobs that those dollars are doing for you once you've worked so hard for them. 800-939-8633, the number to call, 800-939-8633. And Josiah, there are actually a couple other opportunities that we have to take control of those funds, those assets that are inside of our 401k or employer-sponsored plans. So often as we are working through our jobs, those dollars are sort of held captive, but there are some opportunities to take control of those dollars. When should we be thinking about maybe making some moves and taking some action to have more control over what's happening with those dollars and the choices we have with them?
Yeah, when you're talking specifically about 401ks, a couple different time frames you have to be concerned with or taking a look at. I personally always feel that the money that you have that you're putting into your accounts are better being controlled by you than by somebody else. Nobody's going to watch the money as close as you do. And with that being said, where 401ks do have matching capabilities and could help prepare us for retirement, some of the things I don't like about it are some of the limited options that we have and choices involved. For example, if you want Google stock, for example, you may not be able to purchase that with inside of your 401k, but be limited to maybe 3 to 20 different funds that you have choice over. So some of the time frames that you want to be concerned with and take a look at is many companies will allow you at age 59 and a half to roll over your 401k, still contribute, but you may be able to do what's called an in-service rollover, and you can roll that to a self-directed IRA where you retain control and you can determine where you want your money invested or funds put in from there. At the same time, typically, almost every time, once you sever employment, they also give you that ability to roll over to wherever you want to bring that money. In many cases, you're actually forced to move that money. I always encourage people, in today's day and age, we're not really working a lot of times for the same company for 20, 30, 40 years. We're sometimes switching from company to company to company when a better opportunity presents itself, but we don't typically bring our 401ks with us. And I consider that dead or lazy money that, maybe we kind of forgot about. And now that we've severed employment, it's money that's just sitting out there that maybe is not earning the best way it could possibly be earning because of the limited options that you have. So I encourage anybody out there, if this is a situation that you're involved with or you want to know what are some of the different strategies you have for current or old 401ks that you have, please take advantage of some of these consultations in this discovery meeting we'll talk about, and we can kind of put a plan together to tell you, here's some of the great options you've got available for you in today's retirement.
Well, folks, you don't want your money to be lazy, or if you've got one of those orphaned 401ks that you've left behind there, you want to make sure that you're taking care of those dollars and that they are working as hard as possible for you. Again, you've worked very hard for your money. Once you've saved it and put away, you've been disciplined enough not to spend all of your money. You've been responsible. You want those dollars to do the most for you possible. And by leaving them behind in an old 401k or by leaving them in the limited options inside of a 401k when you might have other options after age 59 and a half, those are opportunities for you to take more control and to achieve your goals into the future. I encourage you to take advantage of that opportunity for a complimentary review and evaluation, a consultation with the team from ASC Financial Group who have helped the residents of the Lehigh Valley and the Poconos have a retirement built to last. Pick up the phone right now. Give a call to Josiah Grauso and the team there from ASC Financial Group, 800-939-8633. Again, that number, 800-939-8633. 8633. And Josiah, if you would, here in the last couple minutes of the program, would you walk us through what that process consists of? What is the experience going to be like for somebody who picks up the phone, gives a call, and talks with you about their finances and maybe comes into the office?
Yeah, absolutely, Peter. The way we handle our office here is everybody comes down to see us. Our main mantra, our main goal is information and education. We want to make sure that everybody who walks through our door is more informed by the time that they leave than what they were when they walked in. Making vital decisions could drastically impact where your retirement picture is. We always like to say that when we take a look at our retirement, making informed decisions is the best alternative. Today's environment, unfortunately, we're spending too much time basing our decisions based off of misconceptions and not correct facts that are out there and myths. We want to make sure that you're as informed as possible and that you can properly make educated decisions on your retirement in order to take control. So that's the first type of things that we take a look at in our discovery and our informational process and appointment. We want to make sure we can lay out to you, here are some of the concerns, here are some of the risks that we potentially see. It gives us an ability to get to know you, for you to get to know us as well. If there are things that we can help you with, we're going to let you know that. If there's things that we can't help you with, we'll let you know that too. But if you come and you can talk to us, we're going to be very straightforward. We're going to be very honest, and we're going to give you a detailed plan, in most cases a written plan laid out in front of you and our recommendation phase of what we would do. And that's followed by making sure that it's clarified, a clarification phase, that there's certain things that you like of it, great. Certain things we need to change on it, we can do that as well. But again, our main mantra is to make sure that you are educated so that you can make proper decisions.
And again, with this process, people are under no obligation. But if after that first initial conversation, if it's decided that there should be a meeting, and if after that first meeting, it's decided that there might be some benefit, this isn't just a one appointment type of process. This process is going to be pretty involved, and from your viewpoint, Josiah, this could be a lifelong relationship that you're trying to form, correct?
Absolutely. Actually, everybody who decides to take part in our implementation process kind of has to agree to a couple different things. We are not advisors who just sit down with you one time and you never hear from again. Some of these plans that we put together, they've got to be in liquid fluid motion. The best laid plans that just sit there are still going to be run over by a train on the tracks there. So these have to be constantly in motion, constantly moving, too dependent on both the political or market environment that we see out there, but not only the other environment we have, but your own specific family situations can change from year to year. And we want to make sure that your plan can morph and change with that type of situations that may happen in your family or in the market. So we want to make sure that we're sitting down with people at absolutely more than one time. We want to make sure that they're coming in together with us at least, by far minimum, at least once a year. Also agreeing to come and take a look at some of our seminars that we do, our college planning classes. We want to make sure we sit down together as often as possible that they would like, but at a minimum at least once or twice a year, with a couple more on phone calls. So it is very vitally important to make sure this is something that is constantly being addressed and taken a look at.
Well, I think a lot of people, and in fact studies have shown that that's what the majority of people feel they are missing from their current financial relationship, or might be the very reason why they don't have a financial relationship. And folks, if that's what you are looking for with the relationship with your advisor, your team of advisors, make sure to take the team from ASC Financial Group up on this offer for a complimentary review and evaluation. I think you'll find that you will see the difference almost instantly, and the relationship that you will build over time as the team from ASC Financial Group can help answer and address some of your questions and concerns and help further educate you so that you have the information and the knowledge to make informed decisions for yourself. I think you will find that there are measurable benefits to having that relationship. Pick up the phone and give them a call for a complimentary, free of cost, no obligation initial review and evaluation. 800-939-8633. Again, that number, 800-939-8633. And as it always does, time here on the program moving by very fast, Josiah, as it does in life, and we want the listeners to make the most out of today so they can get the most from tomorrow. And we appreciate your guidance, your knowledge, your expertise in helping us make that happen. Thank you for being here.
Thanks so much, Peter. It's great being here.
And again, folks, for that complimentary review and evaluation, 800-939-8633. We'll talk to you next week on Your Game Plan for Retirement.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Ed Slott's Elite IRA Advisor Group is solely an indication that the financial advisor has attended training provided by Ed Slott and Company, passed biannual examinations on material covered at conferences and in webinars, and met other membership requirements, and does not constitute an endorsement of any kind. Ed Slott's Elite IRA Advisor Group members pay a fee for the educational programs that allow them to be included in the Ed Slott's Elite IRA Advisor Group. Membership does not guarantee investment success. Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.